picking up on a comment from the OECD chief economist yesterday saying that they're looking at a sharp contraction in Eurozone growth this year of 2%, and that is the worst case scenario that they laid out in November last year. So things have got a lot worse this year, and we've seen that panning out in how the euro is reacting to it. And of course, the EU summit today is hoping to give markets some hope going forward. Are we likely to get any kind of outcome from this that would be cause for optimism?
Good morning, Samantha. I don't think there's going to be much coming out of that summit this afternoon, or rather this evening. The Eurozone is still on tenterhooks, and the OECD's comments that the Eurozone is in for a severe recession is not really unwarranted. Standard Bank is also pricing in a negative growth for this year of 0.5%, but our numbers for next year seems to be a little bit lower than what the OECD is pricing in of 0.9% growth. We're expecting a very small bounce back of about 0.5%. But what is concerning is the fact that this risk of sentiment is quite rife at the moment, and it's going to be like that at least until some resolution is forthcoming from the summit this evening.
Yep.
We do, however, believe that a number of policymakers are of the view that there should be some resolution, and that they are going to put forward some pro-growth policies. But whether that's going to be enough to bring the Eurozone out of recession is a bit unlikely at this point.
And of course, the talk at the moment is on Euro bonds and mutualized European debt, and Germany and France are expected to take each other head on this matter. Would a Euro bond be the magic wand for Europe right now? Is it the answer at all?
It may be the answer, but as you mentioned, that there are some concerns from both France and Germany. The one is for, the one is not. Germany is of the view that if they take on further, or rather if they share the debt with the Eurozone, that there may be some moral hazard heading forward, that fiscal austerity may not be forthcoming for periphery economies. So there's going to be some tension coming through, and whether we do see a Eurobond likely is a big question at this point. The Germans are not forward, but Chancellor Merkel may not actually put forward propositions to go ahead for that if she wants to maintain her political stance.
And of course, we're also watching where safe haven flows are going right now, very much towards the dollar, very much towards the yen. The Bank of Japan coming out today and keeping monetary policy unchanged. Some were expecting further easing after we had easing in April. How's this likely to affect currency flows at this point in time, when we still have the Bank of Japan, or the yen rather, very much on the front foot on the global front?
Well, with regards to the euro, we do believe that it's going to remain under pressure at least for the remainder of this day. We are seeing a trading range of about 120 to about 130, given the fact that we do need to see some resolution. Yes, the Bank of Japan has indicated that they're not likely to change rates at this point. They did, however, mention that they are concerned about what's going to happen with the Eurozone, and where that's going to take the European economy as well as the global economy, and the ramifications for the Japanese economy as well. But generally, we are seeing risk-off sentiment driving most of the currencies. The safe haven economies, as you mentioned, currencies, as you mentioned, is the dollar, it is the Japanese yen, and a bit of the sterling as well. But we are going to see further pressure coming in through for the euro for today.
In fact, that dollar index trading at a 20-month high, and we're seeing that filtering into the local market, with the rand falling back once again today. And it's very much geared towards global risk sentiment, as always. In terms of foreign buying in the local market, it seemed like it picked up slightly yesterday, but are you expecting it to continue to remain very fragile, the rand that is?
And yes, we have seen the rand trading in a very narrow range of about 8 rand to about 8.50, and we're likely to see that continue at least until the Greek elections on the 17th of June. So that sort of trading range is what we are expecting. We could, however, see the rand lift possibly today if CPI that's coming out at 10 o'clock is expected to come in. If it comes in lower than expectations, it could be positive for the local unit, but we continue to draw direction from international developments.
So as you say, CPI number coming out at 10 o'clock today. The market is looking at 6.2% for the month of April. What are your expectations at Standard Bank?
Standard Bank is expecting an inflation print of 6.3%. There are no major additional surveys for the month, but we did see the petrol price increase by about 71 cents at the beginning of April, and that should provide additional pressure for the CPI print. Going forward, however, we don't expect food inflation, which has been fairly high last year, has started to moderate. So we don't expect much pressure from there, but it is the petrol price that is going to continue keeping inflation, we do expect it to keep inflation, the April inflation print at a fairly high level.